Hello, everyone. Welcome to the stock-specific class here for Thursday, December the 16th. Let's go ahead and get started. We'll start with the direction alerts. Not really nothing has changed that much since Tuesday. It did look yesterday like the market was really going to stage a strong rally today. We had a nice bullish reversal that took place, but we'll see how things go into the close, but it's not been a good, it wasn't really good after that open. We'll take a look at some of the possibilities here in just a second, but just quickly going to direction alerts. Again, we're right smack in the middle. We're still kind of in that scenario that I talked about on Tuesday where, we could kind of go either way, although the downside risk, I think, is a lot more minimal now. I still don't see a larger correction taking place from here. But then again, I thought we'd rally. I thought we were going to break out today to new all-time highs, and again, that still could happen in the last couple hours here. But the market is definitely throwing me some curves as far as the near-term analysis is concerned, and so that's one thing as a trend trader, though, is you can't get too locked into your analysis to where you ignore what's actually happening. Today is actually not a very good day for being bullish. Obviously, in some sectors, the defensive stocks have done pretty well today, but you have to be willing to look at what's going on, make any sort of shift in your expectations based on what you're seeing, and sometimes that's hard to do. And I'm not saying that, like I said, I'm not saying that we need to completely shift to being more bearish, but it's looking a little bit more bearish in the near term, and I'll show you that when we look at the charts here in just a second. But momentum is right in the middle, breadth is right in the middle, sentiment is still high. In fact, it's moved closer to that extreme range. We talked about that on Tuesday as well, how again the market is just not overly concerned with these pullbacks. They will at some point in time, because at some point in time that buy the dip is not going to work, and it's really going to cause that panic. But I just don't see that being this being the time for that. Another thing I want to point out, the buy-sell ratios. I talked a little bit about this on Tuesday as well, that we were moving closer together, and then we started to go back out again. Again, this is a pretty extreme range right here. And so even if we do sell off a little bit further here, we'll get right back to that extreme area there. And so it would, in my view, that would be kind of temporary, because it would be kind of stretched. It'd still be a little bit oversold. The market is still basically oversold. It was alleviated a little bit with the rally recently, but it wouldn't take much to get back to that oversold condition. So that would be tended to lean a little bit more towards the bull side as well. Let's take a look at the charts. All right, so again, as you can see, where we opened right here. We're at a new all-time high as we opened, but right from that open, we've gone lower. So whenever you get kind of the high or the low of the day right at the open, that's usually pretty significant. The fact that this was the high of the day at the open, and we're trading lower than that, is a pretty significant move there. The only thing that would kind of cancel that out is if the market would rally all the way back up and close positive. But even then, even if it attempts to rally and fails to close positive, it tells you that the buyers are there, but they're not strong enough they weren't strong enough to close the market higher. Which I think would be very difficult because of the fact that we're right at this new all-time high. The fact that we tried to open there and the buyers just aren't there to push it higher, I think that means that we're going to see a little bit more downside in the near term. Now, again, it would have to come down below here for me to be a lot more bearish. We still have what looks like an inverse head and shoulders pattern intact. This, again, candlestick formations are very short-term in nature. So all this is saying is we should probably open a little bit lower tomorrow. Now, where we go from there is, that maybe we open lower and then we push push higher, where buyers do show up. That's what we'd be looking for. But they're not, as of right now, it's not looking like there's buying interest right here at this breakout area. So that's not a good sign. But again, not to overreact. If it moved below this low, that's when I would become very concerned that maybe we are maybe we are in the midst of a little bit bigger correction, or at least a prolonged correction. It's still possible that this could drop down to this area and just be a larger sideways correction before breaking out. Again, there could be a number of different scenarios at that point, but you don't start to address those additional scenarios until it starts showing you that you have to start looking at those additional scenarios. All right. The Dow is actually performing the best of the indexes. It's still trading lower than where it opened. You have a little bit of a spinning top, which is an indecision candle right there. I think it's important. I emphasize these candlestick formations all the time, but you really need to get them down, because it is the market telling you how it's feeling. So if someone comes on CNBC and they start saying, "Oh, this market is acting like it wants to go higher today," because the Dow is up, but and so if you're just focused on the point total being up, someone comes on CNBC and they say, "Oh, the Dow's up. It's a strong signal that the market wants to go higher." Well, no, all you have to do is look at the price action. That's indecision, and that's not what the market is saying. The market is saying it can't decide whether it wants to go up or down, and indecision candles can be reversals. They can be the start of reversals, and so you got to be able to read that, because if you're getting your opinions off of people that show up on CNBC, I'm telling you, you are going to have a rough trading career. And I'm not saying that these people don't know what they're talking about. Many of them have been trading for 20 years or 30 years or something like that. But remember what I always talk about. There are different time frames that you're considering. Now, if I'm considering, if I expect the market is going to move up over the next 5 years, and the Dow is up today, and the overall trend has been moving up, the stock market has been moving up, I could make that proclamation that the market wants to go higher, but my context is that I'm looking at a much longer time frame. And if you don't understand that, then you could be listening to someone that isn't trading the same time frame you are, or looking at the same outlook that you are, and you could get yourself beat up pretty well with that. So now the time frame that I'm typically looking at in these updates is more of the near term to intermediate term. I'm not trying to make long-term predictions. I'll be talking about usually when you'll notice when I'm doing this analysis that I'm talking about where we should kind of trend over the next week or between updates. And then, in some cases, like I'm seeing today, very near term, unless it changes between now and the market close, it's suggesting that we should pull back a little bit tomorrow, and tomorrow should be a little bit, at least an open tomorrow should be down. All right, so that's what the Dow is showing me. The NASDAQ is getting hit the hardest. Big reversal today, down over 2%. That after having one of the better outcomes yesterday. So we basically reversed all of what happened yesterday. So if you were, like I was, really thinking the market looked strong at the end of yesterday and was going to break out and go higher, you have to reverse all of that expectation with what happened today. It just completely reversed it. Now again, does it look like it's going to fall apart? Not necessarily, but I have to recognize what's happening right now. This is probably the key support level that needs to hold here. This could probably drop down a little bit further or open down a little bit further, but you'd like to see that hold. And if it doesn't, then I don't see much. I don't see much there. Maybe right here there's a little bit of support that it could find there at about 370. Other than that, you're coming all the way back down to here. So, and then the Russell, I can't emphasize this enough that we talked about this on Tuesday as well, that we're really focused on this lower support area right here. This has got to hold. If it gets broken, you're going to see a lot of panic in the market. And again, part of that is because these stocks have already been beaten up. You would assume they've already corrected. But if they start really getting obliterated, you're going to see some panic selling taking place. And that's another reason why, that's another thing that you have to always be aware of too, is some of these little psychological factors that, now there are different degrees of bottoms that take place. And I think we're dealing with more of a smaller type bottoming process that's taken place recently. But typically when you're at bottoms, there's not a real strong bullish sentiment. There's usually the opposite. There's usually a wait and see sentiment, or or I don't want to buy anything right now. I don't feel like buying anything right now, and so that's something that and that could be a little bit of what we're getting with the small caps right now, because I know with some of the small cap stocks, I haven't been really too anxious to look to buy them, and that would be that would be consistent with being near, hopefully this being a near-term bottom that we can rally off of. But if that gets broken, then we have to be dealing with a larger scale, which means you're going to have to get to a point where you don't want to buy anything. Nothing out there is looks like it's gone down far enough, and we can start looking at these much lower levels as possible support areas at that time. I don't want to go through the whole list here. Let's skip down to oil. Oil, I think, is significant. It's managed to continue to rally off of this little pullback right here. So oil stocks are probably going to be ones that have held up pretty good today so far. Some of the energy stocks. I mentioned the defensive stocks. Now, what are defensive? Some of the defensive stocks. I think you ought to write some of these down, because you don't have to, make a huge list. But defensive stocks, these are stocks that usually they're stocks that with products that people are going to buy no matter what the economic conditions. Now you can also, some of these would be considered. What's it? I'm trying to think of the term. Anyway, let me give you a few ideas. Pepsi, Coca-Cola, a lot of the drug companies or companies that produce products that toothpaste and that kind of stuff, the shaving cream and stuff like that. So Procter and Gamble, Johnson and Johnson, some of the pharmaceutical stocks. People are going to be buying their prescriptions whether the economic conditions are good or bad. Pfizer, Merck, McDonald's. People are going to be buying food. McDonald's is one of those that always does pretty well in these types of conditions. So, so now, when do these companies usually thrive? Well, they tend to thrive when the market isn't scared yet, but there's just not a risk tolerance. So in other words, when you start seeing the NASDAQ get hit, if the NASDAQ starts underperforming the market, usually it's leading. Usually tech is leading. When you start seeing the FANG stocks dropping, Apple's down today, you start seeing money coming out of small caps dropping, that means there's a risk-off mentality. And but again, there's that fine line between, because obviously you'll see that risk off when people are fearful too. But again, the market isn't suggesting that or the charts aren't suggesting we're going to fall off a cliff here. So what's happening is the professional traders are saying, okay, I don't want to be in these riskier names. Let's get into stocks that people are going to buy these products no matter what's going on. And so that's where that money is flowing. And so if you look at, like I said, if you look at Pepsi, for instance, I mean, look what it's done over the last week, where everything else has been back and forth. Money's been pouring into Pepsi. Pfizer. Another big monster move today. Okay. Now, I wouldn't be jumping into these right now. Look, they're moving over to the far right side of that extreme range. But, McDonald's, it's been trending up. Like I said, Coca-Cola. Look at those moves. I mean, again, it coincides where a lot of the uncertainty over the last couple of weeks has taken place, and money's been pouring into those defensive type stocks. So whenever you hear defensive, these are some of the stocks that you want to be aware of. Johnson & Johnson. And then look at that move there. Okay. All right. Sorry, I didn't mean to get on this too much of a sidetrack there, but the VIX has been dropping, and again, that's another reason why yesterday I thought, man, this is really bullish for the market. You have a bullish reversal, you had a significant drop in the VIX, but then today you're seeing a reversal of that. Now, again, we're not talking about the VIX being high or elevated to where we're saying there's fear. There's not fear in the market right now, but there is a little bit of hedging going on, I would understand why. If the one thing that I try to recognize is that I'm not the only one seeing all this stuff. There's thousands of other people. At least if you're trained in reading charts, you're seeing the same thing I'm seeing. I'm not a genius. I'm not some wizard that can somehow see the future. I'm just reading charts and price action. There's thousands of people on this planet that can do the same thing I am, and they better be if they're running big hedge funds and managing money. So obviously it makes sense that some of these people are like, boy, this should have gone higher. We should have been breaking out. We're not. This could be a near-term negative signal here. I better hedge a little bit. They're buying those protective puts on the S&P 500, and we're seeing a little bit of that bullish reversal in the VIX. But it's not elevated to the point where there's fear. But again, you want to make note of that there's a little bit of concern. I'd characterize it a little more concern today. And you want to see, does it build on that? Do you get another down day? Now, if we get another down day and you see a big spike in the VIX, that would concern me. If we get another down day tomorrow, we open a little bit lower, the VIX moves up a little bit, as it should. It should have that inverse relationship, but it doesn't really start taking off. Then that would tell me, okay, that the market was concerned, but not panicky. It's not freaking out yet. Remember, the VIX remember the simplified definition I have for the VIX. It's the level of it measures the level of freaking out of the big institutional investors. And right now they're concerned, but they're not freaking out right now. But we do want to note that they're concerned. The SMH, again, I thought chip stocks and video was looking like it's taken off. AMD looked really good yesterday. Completely reversed it today, although it's still within that sideways range here. And it can dip a little bit below that sideways range. This is over. Remember, I talked about this on Tuesday that if it drops from here dramatically, that would be like a volcano top, which is rare. That doesn't usually take place. Tops don't usually form that way. Usually there'll be a more of a pointy top to it. You can dip a little bit lower because this could be an ABC. But ultimately, I think this should resolve higher. We should end up seeing the SMH move higher, break out higher out of this range. In the near term, though, it's looking like it could be testing some of these lows first. And the Dow transports, actually, they've been, they have a bearish candle today. They're up a little bit today, but they have that, it's kind of with the industrials, they have that kind of spinning top indecision type candle there. And it could be this is just wave A, wave B, and you're going to get wave C. And so we'll see how that kind of plays out. All right, so that gives us a little bit of the context here of what we're dealing with. So as I go in and look for individual stocks, I want to make a list of patterns that look good. Now, normally we're looking for confirmation on these. We're waiting for them to go back to a buy signal, which is good on a day like this because I probably don't want to be getting into a whole lot today. But this would be a day where I'd be a little hesitant to add anything because in the near term, I'm probably going to get a better price if things do move down a little bit further, or I could avoid losing some money initially as things go down a little bit further. So let's take a look at some stocks that out of the list there. Under construction's been up here near the top of the list. I like the Summit Materials, 91 strength rank. You're getting, you obviously have a little bit lower strength ranks on some of these. I've talked about this before. You have to kind of, and you'll get this as you look at these on a regular basis, that some sectors typically they just historically have lower strength ranks. So you do have to sometimes look at it on a relative basis. And in this case, I'd be looking at probably that 85 to obviously high 90s. If I get high 90s, that's great, but kind of that 85 to 90s range. But this is down around 91. And obviously it would be based on the chart itself. Now, what I like about this one here, and we could switch this to signals here too, is that you have this nice little upward move right here. It looks like you've had kind of a larger ABC correction right through here. Then it looks like it's starting another move up, and then this looks like maybe another ABC, maybe a smaller ABC correction. And we might still be on wave C, and if so, wave C should probably carry us down a little bit lower, not too much lower. But I like these kind of double ABCs. You get these larger ABCs. You get the confirmation that the stock is starting to move back up, and then you get a smaller ABC that gives you a good entry point. You get the confirmation that the stock is looks like it's starting to move back up, and you're coming out of a smaller correction. Those are very high probability type patterns. You don't see them all the time, so it's not like you go out there expecting to see it all the time. But you got to learn to recognize them when you see them, because they can provide good entry points. And obviously, if this does move a little bit lower, if we're waiting for it to go back to a buy signal, then it would start to move back up again. And when we get that buy signal, you look to get in. If it doesn't, if it keeps dropping and falls apart, well, you never got the confirmation anyway. But we're going to throw this one in the watch list to keep an eye on it, especially since we also want to make sure we got some stocks in different sectors, so we're not all loaded up in computer and technology, So let's add this to the watch list. And let's put that signal or that alert on it to let us know when it goes from hold to buy. And then under computer and technology, there's only one I'm really looking at out of this list. And most of it's because we have already a lot of these stocks. These upper strengthening stocks are already in our watch list. But if we come down the list a little bit, this FTNT, 94 strength rank. Again, larger ABC correction right here. Looks like it's starting to move up. And again, kind of the same thing. That could be wave A. Had this sharp move up yesterday, but then it's kind of reversing it again today. We're going to watch it. It's still a little ways away from going back to a buy signal and just coming out of a sell signal in that pullback. Obviously, it's key that this higher low holds. If this thing drops all the way down and goes lower, then we bump it out of the watch list. No need to watch it after that point. But if it can start to move back up again, this could be provide a good entry point. So let's add that in. Under the retail sector, like this MOV, it's a 93 strength rank. I'm going to be a little bit cautious on some of these in the retail sector. I've gotten burned on a few of these recently. If you remember the Boot Barn, and that one looked like for sure it was breaking out. You can see right here, had this little pullback, was right up there. We get in, looks like it's getting ready to break out, and then you got this bad news that came out, just dropped it down. Tempted to rally back a little bit over the last couple of days, and now it's getting hit again. Definitely not looking at this one right now because that one kind of burned me a little bit. But I was kind of, and again, a lot of this is just to make sure we're adding a little bit of diversification. Just because I'm putting these in the watch list and they do, let's say you do go back to a buy signal, doesn't mean I have to go into them. It just means that I've got choices and I can, if I need some diversification, I want to have a little bit of retail in my portfolio, then I've got some stocks that kind of fit the criteria I'm looking for. But MOV right here is pulled back. It had a pretty deep pullback, but again, it's been more choppy. That looks like wave A, wave B, wave C. Had that bullish hammer formation yesterday, but it's down a little bit today. Tried to open higher, has a bearish candle today. It might test that low again. This is now really. I was really bullish on this yesterday because it was giving me a hammer formation right at a breakout area, which is ideal. But you know what? This is a reminder, because you hear me say it all the time, but let's be honest, sometimes you don't hear the words. And I'm the same way. People will warn me all the time, and I don't always hear the warning. I say, yeah, whatever. But you hear me say all the time that there's no pattern that's going to work every time, that's perfect, that we can perfectly predict what's going to happen. All we're doing is analyzing probabilities. And sometimes the market will make the lower probability move. And I really can emphasize that today it's making the lower probability move. What happened yesterday, there was a high probability the market was going to rally today. And so what's happening today, and it's just happening across the board, a lot of stocks, is you're getting the low probability outcome. But boy, you get a hammer candlestick formation after a deep pullback on at a breakout area. 9 times out of 10, you're going to get some rally out of that thing. And this is the 1 time out of 10 where it's faltering a little bit today. Now, it could just be temporary. It could just be going back to retest that breakout again. This could gap down tomorrow and then rally off of that and have a good bullish reversal candle. But all we're doing today is just putting it in the watch list. But that's a pattern I like. But it's a good illustration of a lot of stocks today that seem to kind of be reversing that strong bullish reversal from yesterday. So let's add this in. And this is, I get caught up in this, and it used to bother me early on in my trading career, but I've gotten used to it over the years. I understand the mentality of new traders coming in. New traders coming in, and some of you might be new, and you're coming into this program saying, boy, this is going to be the one that is going to be able to tell me exactly what the market's going to do, and I'm never going to be wrong again. I'm never going to ever lose money again. It's always going to be making money, and that could be bolstered by early trades. You get some of these stock specific trades that work out, and you're like, oh yeah, Jerry's the one. I found him. He's the one that's going to allow me to never be wrong again. And then Jerry is wrong. And And then what happens? You're like, oh, Jerry's just like the rest of them. He doesn't know what's going on. I'm going to go find someone new. The guy that knows everything is out there, and I just got to go find him. And so you go from guru to guru and software to software and program to program, and you're going to do that your whole trading career if that's your mentality. I used to tell people at the start of my courses, I want that to stop right now. Learn how, embrace the uncertainty. We can't know exactly what the market's going to do. Embrace it now, and I'll save you a ton of money. And focus then on analyzing probabilities. But so I know that I'm going to be wrong. This happened to me recently. I had a string of option trades that did very well, and I had some people send me success stories. Oh, I just made $20,000 on this and $30,000 on that. And this is the greatest thing. And I said, well, just wait. I'm going to have a losing streak. Just wait until you judge me, or wait. Hold off. You might want to hold off on your praise a little bit till you see what a losing streak's like, because then that's when I get the hate mail. It's like either you're an idiot. So I grappled with this early it's not necessarily my trading career, it's my coaching career. People used to ask me, are you good at this? And I'd say, well, it depends on whether I'm in a winning streak or a losing. I'm a winning streak, I'm a genius. And when I'm in a losing streak, I'm an idiot. And you get bombarded with these emails telling you you're both. And I had to struggle with that early on. Imagine the mental health struggle with that, am I a genius or an idiot? And luckily, I survived that period, and now in my older age and wisdom, it's just there's a balance there. I'm going to be the genius and I'm going to be the idiot. I don't care anymore. Hopefully what I can instill and teach people is that it's not about being a genius or an idiot. It's about making more money than you lose, and focusing on that process, and not getting too high on yourself when you're on a winning streak and thinking you're the greatest in the world, and not getting too down on yourself, because both are going to happen. You got to be able to reconcile those emotions. Now, how do we do that? Well, you heard me spend a lot of time talking about controlling risk. And when I get into these trades, you see me, one of the things I'm factoring is, okay, here's my stop, here's my entry, here's my stop. And the calculator will tell you there, how much are you planning on losing if you're wrong. I try to keep it around that $1,000 to $1,500 level. So that might be too high for some people. You might have to lower that a little bit. But that's how I control those emotions. Because I'm controlling my risk, it means I'm not going to get as big a reward if I'm right. So I don't get as overly excited when I'm right, because like you make $1,000, you're like, oh yeah, but I could have made 5,000 if I would have risked more. So you don't get overly excited when you're right, and you don't get overly depressed when you're wrong. Oh, I lost $1,000. Could have been $5,000. I already determined that the $1,000 was something I could handle. I'm okay with that. You got to get those levels reconciled. And that's usually the last step for traders to learn, is that psychological battle. And again, I didn't mean to get off on a big tangent here, but I don't have a lot else to go through today. So maybe it's good to cover some things I don't normally cover. All right, getting back to the stocks. If we move on to retail, back to retail again, I do want to add this one again. I've had this in the watch list before, this KRUS. This one kind of drove me nuts because it was in this long, drawn out sideways range. I think I finally got rid of it right in here when it dropped lower below that range. I just booted it out of the watch list and then did this move right here. And I didn't want to chase it. So since then it's pulled back, and kind of a similar thing here. You've had the pullback. Here's about a 50% pullback from that move. You had the big breakout move. It pulled back about half that move. Then you have this little move up and this little smaller pullback. Now again, it's same thing. It's got a bearish reversal day today. That could be wave A, wave B, wave C. You'd like to see this low hold, but we might have another opportunity on this one. So I'm going to add that to the watch list as well. And then let's do two more. Under business services, it's one near the top here, HMHC, 97 strength rank. It's gone back to a sell signal today. So we won't be able to put an alert to, well, actually we could put an alert, tell us when it goes from hold to buy, because it hasn't shown that, it won't show that sell signal, recognize that sell signal until after the market closes and updates. But again, you have this long sideways move. This is very similar to that KRUS, broke out of it, it's pulled back to it. And I'm waiting for confirmation anyway. I'm waiting for this to go back to a buy signal. But I wanted to add this one in, something we could watch, keep an eye on here. Put the alert on it. All right, and one more. Let's go down to consumer discretionary. Oh, you know, I was thinking of, when I talked about defensive names, I was thinking of the consumer staples. Okay, the consumer staples sector is, again, stock products that you use every day, no matter what the economy is doing. Consumer discretionary are stocks that you will typically buy when you have discretionary income, extra income. You know, that brand new TV. You probably don't need the TV right now. You'd like to upgrade to the 4,000K, 50-mile long widescreen TV, brand new widescreen TV. But you don't necessarily need it. So if it works out, you can get it, then you'll get it. So these would be products that you don't necessarily need or you don't necessarily buy every day. Peloton or something could be an example of that, where, yeah, it'd be nice to have that exercise bike, but do I have to buy it in order to live my life? No, but toothpaste I got to have that hygiene going. So anyway, that was what I was trying to remember. I just my mind does that sometimes, where it just draws a blank. I couldn't remember what the word was. But under consumer discretionary, I was looking at this DXYN right here, 92 strength rank, the Dixie Group. And again, you have this nice little bowl-shaped pattern that it broke out of. And it's looking like it's pulling back in an ABC. Now, if this is wave A, wave B, wave C, what usually happens is that wave C will go beyond the end of wave A. So I would expect this to come down a little bit further, maybe not too much further, because it's already a pretty deep pullback. But could it also be that this is the pullback right here, and this is the ABC? We are testing those lows right here, could this be the start of the move up, and this is that smaller pullback where it starts taking off? I don't know. We'll watch to see what happens here. This could be a little bit tricky, because if this could be wave A, that might not be the end of wave B. If this is an ABC, that could be just wave A of B. This could be B of B. You get C of B right here, and then you get wave C coming down. That means you could get a little bit of a sucker's rally right here that rolls over. I'm just kind of going through different scenarios there. The reason why I go through different scenarios too is that if this starts to rally and then starts to roll over right here, I don't look at this like, what's going on. I've already analyzed the possibility that maybe that could be still completing wave B, and that maybe we still have wave C coming down. I think that's important to point out, because I do this a lot. I go through and I'll show you, hey, this is what could happen, this is what could happen, this is what could happen, and some of you might say, well, what are you telling me? You're telling me the stock could go either way, or it could do, what value is that? It's a coin flip. The stock could go either way. No, that's not what I'm trying to do. What I'm trying to do is point out different scenarios based on patterns that could be forming, or support or resistance areas. Sometimes what you'll see me do is I'll say, okay, here was the start of a move up right here, and now it's starting to come down. All right, so this is going to be an important low, and this is going to be an important high. If it breaks out above here, that's bullish. If it breaks down below here, that's bearish. Sometimes I'll do things like that. What I'm trying to do is, it's like being a general on the battlefield. How many battles go exactly how the general plans it out? They don't, right? So a good general will say, okay, this is the plan, but I better be thinking of alternatives. What if landing on the beach doesn't work? What's my alternative? Okay, I better be thinking about that. Not at the time it happens where I'm like, oh, I'm screwed. What do I do now? But I better be thinking about before the attack. Okay, the beach attack isn't going to work. Okay, then we'll do this, and then we'll try this. I better have different plans in place, or be able to recognize when I could be wrong or when something different is happening. You'll notice as I'm explaining these things that I'm basing it off of shifts in sentiment. If it breaks out above here, that would tell me the buyers have pushed it higher. That's bullish. If it breaks below here, it means that the buyers weren't able to hold this support area. That's bearish. That's a shift in sentiment. I got to recognize where these key areas are, so that I'm not caught off guard. Because remember, we're not going to be able to know exactly what the stock's going to do, but I've got to be able to manage that. I got to manage risk. And if it breaks out above here, okay, I buy. If it breaks out above here, I buy more. That's also confirming that the trend is strong. All right, so I'll add this one to the list, and then we'll be done. We'll go over the portfolio here, and then we'll be done. Now, the portfolio rebounded pretty well yesterday, thanks to Eli Lilly. We're still down a little bit, but we got to get back up there. And again, this might be delayed a little bit, a day or two, if we do have a little bit of weakness for a day or two. But let's look at the stocks we're already in. So as you can see here, Eli Lilly had a huge day yesterday off of that ABC. Now, remember on this one, I adjusted the stop on this? I had kind of a random stop. I don't know what. I'm trying to remember. I have to go back maybe and view that recording. I'm not going to do it because that's too much time that I don't need to waste. But I set a stop because originally I thought this was the correction and we were going to go higher off of that. And I set a stop down here that didn't really make a lot of sense. And we got down to that level here, and it was saying to stop out, but this looked like it was just a larger ABC. And so I picked this low right here. This is significant, an intraday low right there. It came all the way off the low right there. So I adjusted my stop down below there. Now, in hindsight, that was a smart move, but again, it was a dumb move in the first place of not having my stop in a pretty clear spot where I know I'm wrong. That's why I made the adjustment. Like, I don't feel like I'm wrong right here. Down here, I would feel like I'm wrong. And we got that explosive move higher. We broke out the new high today. This is one of those defensive stocks, being a pharmaceutical stock. And this has really carried our portfolio over the last couple of days. All the market updates and stock-specific classes are recorded. Just go to the YouTube channel, and it'll usually be posted within a couple hours after I'm done, and you can review what you missed. And that would be for anyone that can't attend live. You can always go and view the recording. LPX still looks fine. It has a little bit of a bearish candle today, but it's still higher highs, higher lows. Still looks like it's trending up. It's had a pretty nice move lately. LPI. This is one of the oil trades. Again, nice bullish reversal candle yesterday. Although it was a sell signal, it was a nice bullish reversal candle. Our stop's down below here. Now this one I didn't wait. Remember, I didn't wait for it to go to the buy signal, and maybe I probably should have. But oil looked like it was reversing. I just I wanted to have oil exposure. There weren't any oil stocks that were giving buy signals yet. So, who knows? Maybe this will end up burning me. But so far, that higher low seems to be a higher low, although today's a little bit of a bearish reversal. We'll see if that gets retested there. But this looks like it has a lot of upside potential if I'm right. Again, limited downside risk if I'm wrong. If I get stopped out, I lose this much. If I'm right, I make this much. I like that reward to risk scenario there. NVIDIA, boy, this one again I thought was taken off. Nice bullish reversal yesterday. Remember, my stop is right below here. I was going to stop out of this on Tuesday, remember, but we had the bullish reversal candle, and so I'm like, I'll make that decision to close, and then before I end the class, I'm going to go ahead and hold this. Well, I'm still going to hold it because I'm not stopped out yet, but that's not looking very good with that candle from today. That we might end up getting stopped out of this, but I might look to re-enter if it drops again and starts. If this is a correction, it starts moving back up again. I think I'd want to be back in this thing because I think it'll soar. If the market's going to go higher, this is going to go higher with it, but may have to stop out in the near term. HBP still looks fine. I have to double check on these because remember that one week where I said it looked fine. I missed the big gap down here. That was on Technoglass. So I'll try not to make that mistake again. But this looks like it's holding up all right. No reason to do anything there. Again, another one that it broke out of this range, pulled back to the support area, tried to break out again, pulled back to it again. Now this is one that could drop from here. You say, well, wouldn't that be a volcano top if it drops? No, because it did break out and then come right back down. So that did give you a little bit of that pointy top. This one could fall apart. It's when it moves sideways. It usually doesn't drop straight down from that. If it's been moving sideways, breaks out, and then it could fall apart at that point. And that wouldn't be a volcano top. That'd be a pointy top there. And I get it. These sound like little kindergarten terms or something like that, but I don't know. Some of these things I see, I got to have a name for them to help people remember what they are. And I'm not the most creative name person, but it's like the candy cane candle, or black candles. Those are different candlestick formations there. All right, so that one, though, I'm not stopped out. I could be pretty close because I think I have my stop down below here. ASBN, this one, yeah, our stop's right below here. This one, we'll have to double check right at the close, see if I'm getting stopped out of that. That one was looking still pretty good yesterday, too. And AMBA, same thing. It was looking at a big down day. Now, maybe that's a C leg and it finds some support. I can't remember if I have my stop down below here. I think I have my stop down below here. I can double check that when I look at let me double check everything here from. So here's where my stop prices are. Oops. So stock's at 179. My stop's at 182. So I am below my stop. So I'll probably let's go ahead and stop out of that one then. That could be another one that I just jump back into again. So that means I had my stop. Excuse me, right below here. And probably the reason for that is we were breaking out, and I can't remember where I got in, but I was based off of that breakout there. I had the buy signal, and based off the breakout, obviously if it broke back below here, that would be not very good, and that candle is not very good. It's probably working its way back down to this low anyway. So even if I have my stop down below here, it could be that I get stopped out on that just at a lower price. So I'm going to go ahead and stop out now. And the current price is 178.92. Now be careful when you're stopping out. Make sure you because this is just a virtual account here that we're doing. It's not a real trading account on this platform right here that we're looking at this. It'll usually automatically put in the sell price of where it closed the day before. That's not where we're at. We're at right here. This is the current price. So I've got to make sure. It'd be nice if I used yesterday's close because I wouldn't have any loss at all. But this is the real price, and it's going to be about an $844 loss there. So if you want it to be accurate, make sure you change that sell price to the current sell price if you're stopping out. ASPN still barely above the stop, so I'm going to just hold that for now. I don't see any. NVIDIA's close, but it's not stopped out yet. All right. Real quickly, are there any in the watch list that could be getting close to maybe adding to the portfolio? Not some of these oil stocks. Some of these oil stocks are still kind of they're in sell signals right now. Although they could be interesting. They can start to move up. GDYN was starting to try to break out today. Here's where it opened. It's right back to near the bottom of that sideways range. We're going to wait on that. I think Ford gave a buy signal today. That still has a sell signal. No, Ford has a buy signal. But I don't want to add anything today. For the market conditions, I'd be willing just to wait. Now, that could be, maybe Ford takes off and I miss it. I don't want to chase it. But there, again, it's already in the middle part of that extreme reversal risk range. I don't like an entry here from where it's at. I do like BW, but I don't like the price action today. I did like that bullish reversal yesterday, but I don't like today. But so we'll wait. See, this goes back to a buy signal. That's a sell signal. Same thing, THRY. All these, I think I would just wait. This is the new one we added today. So all these rest of them we just added. So that's it. Real quickly here, take a look at, sometimes when I have these updates that the market does something as I'm talking that I didn't, and yesterday that what happened yesterday was that I was looking at things and then I got sidetracked and came back and it completely reversed. We had that big bullish reversal after that Fed announcement. This is still looking bearish, so I would expect it we'll have a weak open tomorrow. Now, again, keep in mind, yesterday looked very bullish. It reversed it today. I've seen this happen before where I'm expecting it to be lower tomorrow and then you get a bullish reversal tomorrow. And it's right back to looking bullish again. So you have to be willing to flip-flop like that sometimes. And it can be crazy when you're trading and you're getting stopped out and then you're getting back in again and you get stopped, it's whipsawing back and forth. Yeah, that'll happen though. That's part of trading. All right. That's all I have. Let me throw up the slide here if you have any questions so you know how to email me if you have any questions during the week. But have a great weekend, everyone. We'll see you on Tuesday for the next market update. Bye now.